and Public's benchmark. My name is Allison Crawford, and I will be your host for today's session. The past few quarters, we've engaged with our readers to bring deeper clarity into the state of the public sector IT services market. We've had some good questions and discussions with you as a result of these events, and we're excited to continue to connect with you as the public sector practice grows. In the next 30 minutes, Senior Analyst John Caucis and Research Analyst Sebastian Lagana will delve into trends driving the results featured in this quarter's benchmark, for a Q&A of these trends and how they will affect you. Before we get started, I'd like to cover a few housekeeping items. First, we'll be recording today's session and posting it on our YouTube site, TBR channel. We visit our channel to watch this presentation or any of the others we posted. So we'd like to hear your opinions and thoughts on the materials we're presenting. Send any questions or comments to the Q&A or chat function. We will answer them at the end of the presentation. Or if you'd like to set up a line inquiry for more detailed discussion, please reach out directly to John and Sebastian at the end of the webinar to set up a discussion. Third, we'll send out the slides to everyone registered for today's webcast within 24 hours of the conclusion of the webinar. You can also find the slides as well as other leadership pieces, other webinar decks, and commentaries on SlideShare at www.slideshare.net/TBR_market_insight. Now let me introduce John Caucis, the analyst on the Public Sector Practice Manager, and analyst Sebastian Lagana, lead author on the Public Sector Company Reports and Benchmark. John has been analyzing the market for the past 10 years and is TBR's resident expert in the government sector. Sim has spent the last 18 months immersed in the strategies of the government vendors to uncover patterns and trends unavailable anywhere else. John Sebastian's research has been critical in the planning of black hat strategies for several of our clients, and their insight into the performance of the government vendors has enabled several of our clients to identify new opportunities and revenue streams. Let me hand this over to John and Sebastian.
Thank you, Allison. Hello, everyone, and welcome to Technology Business Research's Public Sector IT Services Benchmark Review. My name is John Caucis, Senior Analyst and Manager of the Public Sector IT Services practice here at TBR. I will be the presenter for today's session. Sebastian will join me at the end of the session to answer any questions that you may have. I'm an analyst with TBR since 2001 and have directed the Public Sector IT Services practice here since 2008. Focus within the public sector IT services market is to provide company-centric research to accelerate our customer success. The we will be reviewing today comes directly from TBR's Public Sector IT Services Vendor Benchmark Report for the calendar quarter of 2012, or 3Q12. This report includes information on vendor strategies, strategic actions, key developments during the quarter, aligned acquisition activity, and overall fiscal and business line performance. The insight our public sector IT services team delivers is valuable to any vendor looking to expand their footprint or compete more effectively in the global public sector IT services market. We are excited to present the findings from our most recent benchmark study and look forward to receiving your feedback and responding to your questions about information presented today. With a summary of the key takeaways from our public sector IT services research for the third calendar quarter of 2012. The key finding we will discuss today relates to the current conditions in the public sector IT services market environment and their effect on companies' fiscal performance. Conditions that have impacted the federal IT sector through the first half of 2012, in fact since 2011 for most vendors, budget uncertainty, delayed elongated sales cycles, program ramp downs and or cancellations also continued to generate significant growth headwinds during the third calendar quarter of 2012. A moment to orient you to the graphic on the slide. The blue line represents the average year-to-year growth for the year 3Q12 quarter for all 20 firms in the public sector IT services benchmark study. It represents the average trailing 12-month year-to-year revenue growth for the 20 firms in the benchmark study. And the takeaway from this illustration is that the majority of vendors in TBR's benchmark study continue to see their top-line sales declining in 3Q12. In fact, To quantify this, 15 of the 20 companies in the TBR Public Sector Benchmark Study suffered contracting top-line growth in 3Q12. Looking at this in terms of two groups, the companies that we cover that have more of a government-centric focus versus the companies that have more of a commercially-centric focus in the benchmark study. 10 of 13 government-centric IT services firms in the study saw their top lines contract during 3Q12, while 5 of 7 of their commercially-centric counterparts endured sales contraction during the quarter. Let's move to the next slide. As we've called out a moment ago, 10 of the 13 government-focused IT services firms in the benchmark study reported year-to-year contraction in their respective revenue. Top line contraction was generally in the single-digit range for most vendors, while a handful, 420, suffered double-digit rates of negative revenue growth. Here on the slide, we've called out a pair of vendors as representative of the performance of the majority of companies in the benchmark study, as well as an outlier vendor whose performance lagged the competition. Information Systems and Global Solutions Group continued its push into energy, healthcare IT, cybersecurity, and transportation to diversify its portfolio and sector focus away from the turmoil in the defense sector. While those did not generate sufficient sales traction to offset legacy business reductions, the firm did gain enough traction to post only a modest year-to-year decline in sales in 3Q12. So, Booz Allen Hamilton's drive to expand in the federal civilian as well as into commercial and international markets to counteract the revenue pressures among federal defense clients has been successful and has enabled Booz Allen Hamilton, like its counterpart Lockheed Martin IS&GS, to limit the contraction in its sales and solely post a moderate year decline of 2.9% in 3Q12. Firstly, public sector practice, which represents about 40% of total company sales, suffered a significant revenue decline exceeding 20% in 3Q12. As the company has seen the number of engagements in the public sector ramp down and conclude during the course of 2012, immediate replacement. And most of these engagements were in Unis federal government business, which itself is about 40% of total public sector revenue. Unisys expects awards made in 3Q12 will drive a rebound in its federal practice in 2013. For example, the $500 million win award that it was granted from the Department of Homeland Security during the quarter. And that move to the next key finding from the quarterly public sector benchmark report. This area from the benchmark study relates to vendor actions in response to the current market conditions, in particular regarding portfolio reshaping efforts, both internally and through acquisition. In hostile to top-line growth, vendors are increasingly focusing on aligning their services and solutions portfolios to still receiving funding priorities, especially at the federal level. This will shifting their focus beyond their core federal market to sectors such as energy and the financial services industry, as well as to international markets in pursuit of new revenue streams. Let me now to orient the audience to the graphic on this slide. This illustration of the 20 firms in the quarterly benchmark study and how they position against another in terms of top-line growth, market performance, and the respective size of their revenue base. This also calls out which firms are growing the fastest and which firms are doing so most profitably. Excluded from this graphic, two outlying companies, those companies being NCI and Unisys, as each posted large top-line contractions that caused their respective graph positions to fall well outside the general area where their counterparts were positioned. The x-axis represents absolute dollar growth of each vendor's public sector IT services business. This reported or estimated operating margin for each vendor's public sector IT services business. And finally, the bubble represents the volume of revenue generated in the quarter through public sector sales. The year-to-year growth rate for the 20 firms in the benchmark study, negative 6.1%, is also plotted with the dashed red line, while the average operating margin of 9.3% is with a horizontal dashed red line. The aforementioned companies excluded from the graphical representation here were also excluded from the calculation of these averages. Growth tended to share many of the same drivers for their revenue performance, including invest to expand outside the federal sector into areas such as and even commercial markets, where capabilities in cybersecurity, for example, are in demand by financial services firms as well as firms in other sectors such as manufacturing. Government revenue growth leaders have been somewhat buoyed by acquisition activity, with the firms realizing inorganic revenue contributions, closing new acquisitions in 3Q12. Commercially centric IT services firms' growth is largely organic during the quarter, driven by demand among federal, civilian, state, and local agencies for IT, business systems such as SAP solutions, healthcare services, and niche outsourcing solutions such as document management as provided by Xerox services. ITOM remains a margin leader among commercially centric firms due to its process and delivery efficiency. Moving margin leaders, the margins this quarter had primarily achieved leading margin performance as a result of the cost reduction initiatives that they've implemented not only during the quarter but throughout 2012. These initiatives include supply chain management, such as currently at Raytheon. Other vendors have intensified their focus on strong contract execution. And we'll discuss the top 3 revenue growth as well as operating margin leaders in greater detail in the next 2 slides. Year-to-year growth during the quarter was driven by Xerox Services public sector practice, which TBR estimates realized a 5.9% increase in its top line over the same quarter in 2011. In U.S. healthcare and local markets can step up and were key growth drivers in 3Q12. Acquisitions and strategic partnerships also enabled Xerox Services to enhance its own offerings, augment the legacy healthcare expertise of its newly acquired ACS business to win IT engagements with level clients. For example, a $2 million award with the state of Nevada won during the quarter to provide BPO support for health insurance exchange. SC, the second leading growth vendor in 3Q12 with a 2.9% year top-line expansion rate. The IT space was also a primary source of growth. Acquisitions of Max IT and Vitalized Consulting Services also provided an inorganic boost to IC sales, helped track the completion of programs in the civilian space. The third, CACI, posted top-line year growth of 0.7%, relatively flat. A strong expansion in its healthcare and business systems operations was sufficient to set contractions in CACI's Department of Defense, commercial, local business groups. Moving slide, we will discuss the operating profitability leaders in 3Q12 and drivers of their margin performance. EATS's estimated public sector operating margin of 12% in 3Q12 earned the top spot amongst the margin leaders in the quarter and highlighted the company's ongoing effort to lean out its cost structure through headcount reductions and reorganization efforts. At the level, HP reported 8,000 layoffs during the quarter, 5,000 of which TBR believes were in HP services, and a portion of which is likely inclusive of its public sector operations. The actions impacted billable and unbillable staff, the latter resulting in reduced operating costs. TBR Global Services continued to expand its portfolio of high-value solutions, both organically and through acquisition during 3Q12, which supplemented the firm's ongoing efforts to maximize productivity and operating efficiencies and automation of service delivery in IBM Global Services to leading spot amongst the market leaders in 3Q12. IBM Global Services is realizing traction with Smarter Planet initiatives, in particular with local clients such as seats, education clients, and healthcare clients. So, primarily in high-growth markets that Southeast Asia, in particular in the Philippines. Accenture realized a leading operating margin result in 3Q12, according to our estimates. Its ongoing efforts to reduce employee and operating expenses and streamline its organization, as well as efforts to broaden its portfolio with high value and more lucrative offerings. We'll now move to the final key takeaway from the quarterly sector benchmark report. Our first discussion topic from the benchmark study today relates to vendors' outlook for the remainder of 2012, as well as their outlook into 2013, along with vendor views on the impact of the recent fiscal cliff solution. Moment to orient the audience to this slide. Created the projected top-line growth for the 20 vendors for their full year, calendar 2012 revenue. And we want to emphasize that this is the full, not the calendar quarter. This is the aggregate for the entire calendar 2012. Overall, most vendors have guided for the top-line growth performance seen during the first half of 2012 to really continue in the second half of the year. Calculating the 3Q12 results and taking into consideration any changes in calendar 2012 projections, the 20 vendors in the benchmark study either expect or have guided for 2012 sales to decline from 2011. And we're several weeks into the current earnings season, and have seen this play out as companies have been reporting their fourth quarter and full year 2012 results. And 2012 will be, in fact, the second consecutive year that they suffered contracting sales. All 5 of the 20 vendors in the benchmark study are projected to see positive top-line growth in 2012. Those statements or other adjustments may change the final results. Yes, the drivers behind the expected top-line growth for services, SAC, both S&S Group, and CACI. Firms in the study all expect the same conditions that have hampered their growth efforts during the early part of 2012. Budget turmoil, austerity in IT and other federal spending, defense cuts, and the continued drawdown of operations in Iraq and Afghanistan to remain the primary headwinds to growth for the remainder of 2012. So we'll take a few moments now to discuss some of the factors driving the guidance for the firms expecting to post growth in 2012, including direct services, SASC, and etc. here on this slide. TBR expects the continued ramp-up of recent deal wins with state and local governments, especially in the healthcare space and with its outsourcing solutions, will drive Xerox Services' top growth in 2012. And the firm is likely to follow this in 2013 with more acquisitions. I see the split will not impact its 2012 top-line growth. We do expect SAIC's top 2012 growth to come primarily from the Care IT and C4ISR areas. That's $32 billion in submitted bids, which $20 billion was submitted during 3Q12. Paired strong win rate should help to lift its revenue growth as award decisions pick up at the end of the year, as evidenced by the $23 billion in award decisions tied to SAIC during 3Q12. Projected to close 2012 with higher public sector sales, also owing to its momentum in the healthcare IT space. While structuring of its U.S. government business helps it generate new awards in the federal civilian space. And though not profiled on this slide, I would also like to take a moment to mention the outlook for CACI and its Global Services and Solutions Group, whom are also expected to generate top-line growth in 2012 over 2011. We think that CACI will continue to realize success in its target growth markets, with healthcare IT and business system services going to capture double-digit growth. We also see for us our intelligent markets, while remaining pressured, will be a drag on CACI's business, primarily due to troop drawdowns in the Middle East. Boeing's IT Services division will generate positive top-line expansion in 2012 due to continued volume growth, higher revenue on integrated logistics programs, maintenance, and support contracts. Last, to make some comments about the outlook for 2013. 3Q12, most vendors had yet to offer margin guidance for the upcoming year. Seemed concerned and expressed that concern about the impact of the ongoing budget turmoil, including whether sequestration will occur and how it would be implemented. Regarding sequestration, many vendors noted that sequestration would not likely apply to program funding and/or programs currently in their funded backlogs. However, due to the lack of guidance about how sequestration would be implemented were it to take effect at some point in 2013, we need to prepare for a broad range of possible scenarios. The nature cycle of government IT services contracts will also continue to be a growth headwind, just across most federal agencies and local governments continue to contract. Of the final outcome, and not sequestration is triggered, most vendors expect to see negative impacts on revenues, margins, and cash flows. Further, on top of sequestration and other cliff complications, are now working under another 6-month continuing resolution. Express their concern that the current continuing resolution will have far fewer exceptions for new program starts, including IDIQ tasks and production quantity increases. The current resolution apparently also limits the ability to shift funding from program to a program, as done previously, to mitigate execution issues. Sources have reported continued downward pressure on pricing, especially with contract recompetes. They commented, for example, that it become more challenging to rebid contracts with the same workforce. Commented that they see most of the cost and pricing pressures coming in traditional skill work, that is, systems and engineering and technical assessment. This is reflected in the trend of vendors focusing on margins in lieu of revenue growth. We also believe that this reflects the ongoing trend of low technically acceptable contracting. In those cases, we believe clients simply want to get more bang for their buck. They're being forced to tighten their own belts. The IT services business in the federal sector is having much lower barriers to entry for competitors from the commercial sector. I believe the competitive landscape is expanding. So vendors respond to the myriad of headwinds and challenges in the market environment in 2013. They continued focus on maximizing efficiencies across operations, including business development and contract delivery, in order to sustain profitability, cash generation, position for a return to growth when market conditions rebound. On the inside, vendors taking a variety of actions, including rationalization efforts or just-in-time hiring, exit diminishing operations in lower margin areas or contracts, leading and development, including cross-training, the and reorganization of existing business groups, increase customer alignment and drive efficiencies, and chain integration to continually improve program execution, affordability, and quality with supplier and teammate ecosystems, reducing overhead costs through like facilities consolidation and aligning G&A costs with the current revenue base. The aforementioned efforts to generate stronger operational performance will also enhance cash flow. TBR sees vendors continuing to execute a disciplined cash management and deployment strategy into things such as acquisitions, purchases, dividend payouts, as well as efforts to support organic growth through internal cash deployment, such as in supply chain management or resource management, or in areas such as research and development. So with some operational enhancement, will there be any pockets of growth and new opportunity for vendors to pursue 2013? Please, the answer is yes, and this also relates to the ongoing portfolio optimization efforts by vendors in the benchmark study. While the budget request for fiscal 2013 is down marginally from 2012, assuming sequestration is not triggered, this will be primarily on the defense side. The spending request among major federal civilian agencies is actually about 1.1% higher than that of fiscal 12, with double growth in the budget requests for full departments, including education and treasury. Other departments, including agriculture, HS, transportation, and veterans affairs, are expected to moderately increase their IT spend in 2013. Services and solutions, security, ISR, and healthcare IT will be among chief growth opportunities in 2013. Specifically, TBR also sees vendors focus on mining newer increased business in the following areas. Engineering services around sustaining existing systems and making existing platforms more efficient. In consolidation driven by increased cloud adoption. In the deployment of big data solutions, which will in turn drive demand for analytics solutions. The development and adoption of mobility applications across federal, state, and local governments. The current proliferation of mobility, cloud, big data, and analytics, which will have the need for solutions, innovation management, and sharing across government entities. Greater leverage of analytics tools for data generated by social media. Continued acceleration of smart city evaluations and deployment at the local level. Vendors are looking beyond their traditional or core federal markets for new opportunities. For example, leading with their cybersecurity and or IT capabilities to put new business in commercial markets, financial services, healthcare, and energy, as well as in international markets in the Middle East, Asia Pacific, and the Australia New Zealand market. Presentation on the key takeaways from our public sector IT services benchmark for the third calendar quarter of 2012. Before we begin taking questions, I would like to briefly mention some of the areas TBR Sector IT Services program will be exploring in the coming months. Dedicated company reports, as well as within our end-of-quarter benchmark study, we will continue to track and analyze, drive revenue growth and margin performance. Actions taken by public sector IT services firms to adjust to the market conditions, further leveraging alliances and acquisitions, how these are managing their human resources, segments are being targeted for new growth, what new solutions and services are being developed and introduced by companies in the public sector IT services space. TBR is also considering additional research programs into areas such as cloud computing in the public sector, cybersecurity, and opportunities for U.S. vendors in international or commercial markets. Thank you for joining us today, and I will now open the floor for questions.
Great, thanks, John. We've had a couple questions come through. The first question we have is, what are vendors saying about sequestration, and how are they incorporating the possibility of sequestration into their planning for 2013?
Well, thank you for the question. In addition to the comments that I made earlier, what I'll add is that within the context of the ongoing earnings season, it's been interesting that still haven't really factored sequestration into their guidance for 2013, or assume that sequestration will result in any kind of unusual or unexpected customer behavior. Guidance that vendors have tendered thus far for 2013 has assumed that sequestration cuts will be avoided, although some have commented that don't anticipate sequestration would apply program funds in their current fund backlogs. However, as I mentioned earlier, many vendors have commented that if sequestration does become a reality at some point during 2013, impact without question will be negative on their revenues, margins, and cash flows. Who stated that they internally considered or projected several potential scenarios for 2013 if sequestration happens, and are making the best actions that they can with guidance from the government. It seems that no one vendor's crystal ball is any better than the others at this point. We'll see a cautious approach to capital deployment, which is happening towards the end of 2012. For example, decisions regarding dividends, share repurchases, pension contributions, and mergers and acquisitions, probably driven by the lingering threat of sequestration, which has obviously been pushed off until next month. We believe that the more immediate concern for most firms, at least from a 2013 planning perspective, is the current 6-month continuing resolution.
Great, thanks. The second question we've got, since you mentioned mergers and acquisitions, when did you see around mergers and acquisitions in 3Q12, and what do you anticipate going forward in 2013?
Thanks for your question. The thing that we'll see more of in 2013 is a heightened focus on margin performance as a decision factor in M&As. Even more so than it was in 2012 when margin performance essentially became the mantra in lieu of revenue growth. Companies wanting transparency regarding their margins and any return on an acquired companies. In other words, a little uncertainty as realistically possible. We saw them electing to invest internally rather than acquisitions, developing capabilities organically. With return from margin and the top-line perspective will be more predictable. I also believe that, as we just discussed a moment ago, the looming sequestration put a damper on activity up to this point, at least as it relates to accurately determining valuations. The sequestration question is resolved during 2013. It's to lead to a more aggressive portfolio shaping via acquisition. We believe that there are still many firms currently scouting for acquisitions to expand their capabilities, despite the uncertainty and despite the challenges with valuations. Looking for candidates that will expand their capabilities in priority spending areas or new markets. We also believe that many companies, in terms of M&A, are simply biding their time until the disconnect with valuations is finally resolved. And one final comment. In terms of merger and acquisition activity outside the U.S., I believe that there will continue to be an interest among for national acquisitions, primarily among the companies with the most aggressive international ambitions, with the primary challenges being both valuation as well as the complexity of making a national acquisition from a integration standpoint.
And one final question, it looks like. What's happening around the development and introduction of new services and solutions?
Thank you for your question. What we saw during 3Q12 in terms of new solution and service introduction, it seemed to bias towards multiplication introductions. There were a number of firms that did so during the quarter. It seemed to be one of the most active areas of development. However, a continuation of firms adding new or existing capabilities. There's the C4ISR portfolios, in cybersecurity, computing, and analytics as well. And this is an area that we're going to be tracking more closely going forward. And certainly provide more detail around this. In other words, we can provide, it's in our benchmark report, but we can provide a detailed list of vendors and the service and solution introductions that they made during the quarter.
We had a bit long, so the remaining questions, we're going to answer those individually so you can wait to reach out to you. I'd like to thank you, John, for your time, and thanks everyone for sending across your questions. You can find John and Sebastian, who is kind of quiet today, and TBR here. The Twitter handles listed. I've also included the links for SlideShare, where the deck will be uploaded, as well as you will get this email to you tomorrow. You can also go to YouTube to look at the recording again and pass it along to your colleagues inside your organizations. And encourage you to join our LinkedIn group, where we'll be posting information around press coverage, upcoming events, and the like. Before you sign off, we'd like to ask you to take a short 2-question survey around the content and the presenter from today's presentation. We'll be having feedback to improve our webinars from quarter to quarter, so your inputs are greatly appreciated. I'm going to leave the chat function open for another couple of minutes in case there's anybody who has any last-minute questions or wants a follow-up conversation with either John or Sebastian. If we hear from you, we will look forward to speaking to you guys again next quarter. Have a great afternoon, everyone.